ladies and gentlemen. The Indian stock markets are presently facing a bloodbath which has never been heard of since the turn of this century. 9 lakh crores. That's how much of money the investors lost in just today's trading session. Sensex slumped by over 1,400 points, ending a little under 73,200, while Nifty shed 400 points to close at 2,224. This is the lowest since June 4th, 2024. But the fall isn't just today's story, and that's why we are bringing up for a discussion with an expert. Investors have been witnessing their portfolios in deep red since months now. At the end of September, the markets clocked their record highs. Sensex had nearly touched 86,000, while Nifty was well above 26,000. In the 5 months since then, Sensex and Nifty have fallen almost by 15 and 16% respectively. And to explain the severity of the situation in stock markets, here's a figure. Nifty has ended a month in red for the 5th consecutive time, which is its worst performance in nearly 3 decades. Not even the 2008 economic recession or the unprecedented COVID could bend the markets in this manner. Now, there are multiple factors behind the stock market slump. One of the biggest being Donald Trump's return to power in the United States. Trump's second presidency term has seen global markets take a hit, including the Indian markets. The US president's constant warnings of imposing tit-for-tat tariffs on India and other nations has sent shivers down the spine of Indian investors. Another big reason for the market mayhem is foreign investors withdrawing huge sums of money from India. Since September, the FIIs have sold $25 billion worth equities from Indian market, with many of them placing their trust in Chinese market. Now, what should an average viewer who is invested make out of all of these things? Well, you of course have the other expert rivals, channels, and even our sister concern Economic Times, who will take you through all of this in depth. But here's all of it in absolute simple terms. I'm being joined by Cheryl D'Souza, who's a news editor at ET Now. Very good evening, Cheryl D'Souza. Thank you so much for joining us. You, of course, have this up your sleeve. You cover this day in and day out. But here's breaking it down beyond jargons for us. So let me just first ask you this question. When you hear of talks that we are going down the road which is possibly equivalent or worse than the 2008 recession, how do you respond to that?
Hi, Sneha. Thank you so much for having me on the show. We've heard this term on and off all the time. And I think the problem is that there are a lot of people and a lot of investors that have actually entered the market post the COVID-19 crisis, right? So due to that, what has happened is that you have a lot of investors who are brand new into the market. They don't know how the markets function. So corrections are a course of your market journey. What investors or what experts believe, and they say that we are in midst of a bull market correction. The bull market still is intact. And when you talk about bull market, it's basically the fact that how the markets only keep rising, ignoring all the bad news. Given the fact that India's macroeconomic stability is there, we are actually one of the world's fastest growing economy. You have investments coming in place. So all of that factors still are intact. No doubt there is, like you mentioned, that you have the new, brand new Trump regime. And this time he's talking about MAGA, and he's talking about it loud and clear. And that kind of has actually spooked a lot of investors, because now you have the US economy that could possibly be doing well. That's where the money is shifting. That's the reason why, and one of the primary reasons why you have the Indian market seeing this sort of a correction. But no doubt we have a lot of experts who keep answering this question. And yes, it could look like that, but it isn't like the big crisis that we saw at the GFC.
Okay, Cheryl, we of course discussed about Donald Trump. You also just made a passing mention of that. But here's a question. What are the larger reasons for what we are seeing right now? You mentioned a lot of foreign investors are putting in their money, but we've also found out that a lot of the foreign investors for that matter, have sold $25 billion worth equities. a lot of foreign investors are withdrawing huge sums of money. You also have something around the government's expenditure, the savings of people. Could you give us maybe the top 3, top 4 reasons for why the market is behaving the way it is? Is there any other factors beyond Donald Trump?
Yes, absolutely. Like you mentioned, it is the FI outflow. That's one of the primary reasons where everyone is spooked out, given the fact that you have foreign investors who actually park their money into Indian markets. They invest in Indian markets via various routes. You have mutual funds, you have various other routes, how they actually park their money into the Indian markets. So on back of that, since the fact that they are now shifting that money out, and why are they shifting the money out? A, they're finding US economy also very attractive right now, because there was a time when the Indian market economy was booming. It was the go-to market post the COVID-19 post COVID-19 crash that the markets had witnessed. A lot of these investors did park in their money because Indian markets did fall and they were at a very reasonable valuations. So what happened is they were actually parking their money into an economy that was growing, that was booming, that was giving them everything that they wanted. Plus the fact that there was a shift from away from China, right? There are a lot of companies that were looking at an alternative to China for their manufacturing. That India was a big boom, big go-to place for a lot of these companies. So a lot of money started coming into India. What's happening right now is the fact that you have Trump taking this sort of a stance where he is going to make the US economy the most strongest, and making sure that with this tariff that he's going to impose, or the reciprocal tariff that he's going to impose in April, it makes us look a little dicey. At the same time, Chinese markets have fallen immensely over the last 2 to 3 years, right? So now what is happening is the Chinese markets, the Chinese government is trying to stimulate the economy, trying to get it up and running. And that's one of the reasons why a lot of investors feel that given the fact that the Chinese economy has fallen so much, the fact that the government is trying to stimulate the economy, this is where we should park the money. And that's why we are seeing a shift out of India into China, or for the matter of fact, shift out of India into the US. So that's one of the most primary reasons. The other one being when you had the budget, Sneha, I'm sorry, I'll just take a minute more on this to talk about the union budget.
No,
because when the union budget did come in, you had the government all of a sudden, what happened with a lot of investors, they realized that is the government now trying to shift the focus into a consumption-led economy than a capex-led economy. There was a time when we used to say build India economy. Is it going to consume India economy? And that is also one of the reasons why we actually saw that sort of an aggravated sell-off, at least in the month of February.
Okay, so if you're talking about that, are you then saying, I mean, could you just spend a few minutes to understand, is there anything to do with, as you mentioned, capex to consumption-based economy, say the government's expenditure and people's savings? Are the sentiments reflecting, are these in any way contributing to the sentiments?
One of the reasons why also, Sneha, it could be because the inflation was so high. You know, that was one of the reasons why you had your pockets curbed quite a lot. You wouldn't be able to spend. And that's one of the reasons why you also had your retail consumption go down. There was a talk at one point in time that you have your rural economy that was not doing well, especially for these FMCG companies. These companies like your HULs, your ITC, the ones who used to be your basic consumption. There was a time where rural economy was not contributing. Now there were talks that the urban economy is what is curbing the spending. So that also could one of the be reasons why, because people have started actually it started pinching their pockets. You wouldn't want to go out and splurge at every sale that you see out there, and that's been the case for most of them. So that could be one of the reasons why you saw the economy also slow down quite a bit. And that's one of the reasons why what actually even kind of pushed the RBI, the MPC, to go ahead and cut the interest rates, hoping that now that will boost consumption. There will be money in people's hands to go and spend, with the government giving the incentives in the budget. Hopefully that spending also will come in, but that all will reflect only post-April, because that's when it's all effective, isn't it? So maybe the second half of this year would be great for all of us. We may spend more, Sneha.